Hello, my name's Adam Granison. It's my second take of the video. So much. This is I've pretty much been reading a little bit about pretty much our the value of money and currency, pretty much our monetary policy of the United States, and just pretty much in general around the globe and how it relates to that. So pretty much the Federal Reserve and the Treasury work together. So pretty much the Treasury, pretty much. Was the first institution, and it pretty much protected the value of money. So much what it does, it can, what it pretty much it not only makes the money, it prints the money, but it also absorbs the money and disposes of it to ensure the value of the U.S. dollar. And the Federal Reserve, that's deposit where it pretty much loans out money to other financial institutions, other banks. So pretty much the Federal Reserve is a bank of banks. So pretty much it loans out money to banks so they they can do their banky stuff. They give it to people so they can set up accounts and give out loans for small businesses and things like that, and a whole lot of other stuff that we know that they do. So much the Federal Reserve also it handles interest rates. So much your loans, when you take out a loan, so as you have to pay it back with interest. So much there. That's why a bank is literally can be profitable if it's reasonable, if it makes money in reasonable ways, which I don't believe the current ones do. But either way, so these banks they send out loans, for small businesses mainly, but also for people, so they can get mortgages on homes and stuff, buy homes, live, shelter, things like that. The basics. And these interest rates, they're all set from the Federal Reserve. It's much some ideas from a concerned citizen, civic engagement. I've noticed that we'll admit I'm a kid who can't read good. I've noticed that if anything, the interest rate, I may be mistaken, but I believe the interest rate is universal. Not only so much the interest rate, I could be wrong, but the interest rate that you guys pay for your loans is influenced in the same way. So for your mortgages or any type of loan is influenced in the same way that interest rates are for these huge corporate banks. So yeah, so pretty much if you have like pretty much, so if you have a small businesses, who has to pay back the same amount of interest that a corporation, of course the corporation is going to be able to pay off their interest more. It's because they got more capital, they got more clout, they got everything. So it's pretty. If that's true, that's pretty much, it's pretty silly. It's pretty silly. Why in the world would you have a universal interest rate? So if anything, just my little from the peanut gallery, I'd say that have to, that have to, you have to fiddle around with that and improve it and make it not universal. Make it specific to the amount of in a broad sense, to the amount of capital whether it be a private institution or individual, it should be respective of that capital that individual has and their ability to pay off that interest. Okay, so if not, you're going to have that big old, that mortgage-backed security crisis again. So yeah, that's important. So interest rates should be universal. At least I believe so. Also, these interest rates apply to our federal deficit and things like that. So much we much foreign companies and a lot of foreign. What's interesting is that people think that that most of our debt is in foreign powers. Most of our debt is actually public. So much. People from foreign countries, they buy our debt so much, but it's generally the public who does that. It's not really the government. I mean, the governments themselves, they have very little debt in the United States. I mean, they have a lot, but compared to the amount of their foreign citizens that they have invested in the United States, it's the investors. they're the ones that bought up the majority of the United States debt, which is pretty interesting. People think it's like their governments. It's like, yeah, I mean, it's their governments, but it's mostly it's their people, because they're the ones who make the money. But also, these interest rates apply to those foreign that foreign debt. So pretty much we're pretty much low. So pretty much the interest that you pay back in your small businesses, in your mortgages, is pretty much the same interest that these huge billionaires in foreign countries they have to pay back loans if they take out from the United States. So it's kind of weird. So it should not be universal. It should be respective of how much. I mean, your ability to pay back that debt that you accumulated. So the interest rates should not be universal. Okay, that's going to help ensure the value of our currency and help prevent another financial whatever, or it'd be a friggin' the Great Recession or whatever you want to name it. It helps. Okay. So much the Treasury so much it ensures the value of the U.S. dollar. And it should be so much. It also does what referred to as it absorbs money. Okay, so it absorbs money. So what does that mean? It means so much it. Don't be freaked out by this, but yes, the Treasury, it shreds money. And why does it do this? It's because like when you print money, you can't for in a very simple example, so much. You use money, you handle it, your hands get greasy, I was eating a whole bunch of different food, and it's like, oh, you handle money, you give it to, you cough on it, you give it to, your cashier, and they, sneeze on it, and it's like, so no, yeah, it wears out, and you have to, for example, dispose of it and print new money. So money wears out. It's not like, it does degrade. So what do? They print new money and dispose of it. So that ensures that like if someone just wants to bank caught fire and it's like it won't change the value of the U.S. dollar. Actually, it probably increase the value of the U.S. dollar if that happened. But still, it stink for the bank because you literally burned up money. You get what I'm saying? So much it's so much. So when it absorbs money, it shreds the money and increases the value of money that is in circulation. So for a little bit now, so I'm just a chemist. I'm no economist or something whatever. I don't have a PhD in economics, but either way, but it absorbs money. So much. The interesting thing that I found out is that it's always been this way. But to improve it, that's what scientists do. We're for progress. We improve stuff, whatever it is. We got to improve it. So much. If I were to improve, the Federal Reserve and the Treasury, I'd do it in a way that the Treasury it collects the money that it gets and it absorbs and disposes of. It takes it from taxation. The money that we get from taxes, that's generally that's the money that it uses to dispose of. So it doesn't mean that it's literally taking money from people and just burn it up. I mean, it just means that it's pretty much it's disposing of the money the wrong way. So much if people if the people that who are the majority of the people who are paying the taxes are the 99% and really don't have that much money to begin with. So if anything, what I'd do would be those loans that we give out to these huge corporate banks who have tons of billions of dollars. Why would you absorb money from taxes from majority from the people when it's the huge financial institutions which have the money? I mean that's why would you absorb money from just generally the public? What you do is you'd absorb money from the people who you loan out the huge dishes of currency to, and that would be the corporate banks. And what does this? The Federal Reserve and the Treasury is in charge of this. So it's much there's this kind lady, I forget her name. So much she's in charge of the Janet L. Yellen. So much she's been championing transparency in our Federal Reserve, and I'm really behind her. And the Federal Reserve balance sheets. I mean, she's pretty much initiating some good policies like interactive charts. I mean, so pretty much people can be civically engaged, not only but mainly the people in charge of this can look at these balance sheets like, hey, we can. This is what we need to do to improve this. This is what we do to ensure the value of our money. So they're pretty much. I mean, she's doing it for everyone, pretty much the entire public. So much the interactive charts for so much they're interactive so much even a kid who can't read good can navigate its way and understand these balance sheets. So much Janet L. Yellen, and also it's pretty interesting. So much. Also, what I wanted to talk about was so back to this this absorbing money. So pretty much a way to absorb it without them giving it up would be not only to pretty much have higher, so pretty much increase the interest rates on the money that they dished out. I mean, the money that the Federal Reserve dished out, increase the interest rates, and when they pay it back, just shred the shit. I mean, that's how you'd pretty much take away from. I mean, that's how you pretty much that'd be another way. That's progressive economics. I mean, that'd be a way of pretty much absorbing the money in a progressive sense, so that you wouldn't have to worry about this federal or just this a crisis. Or from what little bit I know. So it'd be a way. I mean, so much. Why am I talking about this so much? Other things I have to talk about. So okay. So pretty much also what happened during the crisis? Pretty much the mortgage-backed securities. So pretty much the Fed. Pretty much it Fannie Mae and Freddie Mac. They had these mortgage-backed securities, which are essentially, these mortgage-backed securities are essentially, it's just property. It's just like it's a property contract. So much they use this thing. So much Fannie Mae and Freddie Mac, they're pretty much they gave this there are people buying houses, mortgages and stuff like that. They let them, they hedged their properties on Wall Street, and it was subject to market changes and forces, and when the market went all haywire, the prices of the mortgages went up, and no one could pay it, and so all this property that they had to foreclose on, which was the wrong thing to do, but no one knew at the time. So they had all this property. So now Fannie Mae and Freddie Mac, they had to stay in business, so they sold all the property to the Fed. So the Fed has lots of property. So why is this good and why is this bad? So it's bad because Republicans, from Republican sense, is like, what the hell? I mean, this is the opposite of what we want. We don't want the big government and them owning and dishing out property. Why is it good? Well, if we have lots of these mortgage-backed securities, and also possibly other banks who have these mortgage-backed securities, if you want anyone to have lots of property in an industry and that is mostly corporate and and the balance of capital in that industry is out of balance, you'd want the Fed to have these mortgage-backed securities. So what you do is, it's like, I mean, pretty much what they're doing now. It's really common. And it's like, it's like they have these little auctions where they auction off, these properties at very cheap. So what you do, I mean, so much, not only that housed so many people, but it also it allowed for the federal government to make back more of this money that this debt that they bought, or this debt that they bought from these corporate companies that not only that pretty much the Fed bought their debt because they made this huge mistake, and in a way, not only they'd be able to make back at least a portion of that debt, but also they'd be able to get back money because they provided a stimulus to these banks, right? Provided a stimulus to these banks, and these banks really didn't exactly really correct what they should have been doing. It's just so much. So it's a good thing that the Fed has these things, and they can get it back, and we can get back to smaller government by having the people buy back this land, which they should have had in the first place. So small businesses in the real estate sector can actually grow, and in fact, just if people just or just house people. You can have businesses in the real estate sector, small businesses in the real estate sector, and you can literally house people. Or if you just want to give it to governments and let the people have back their houses and stuff, and it's like these are opportunities, and like and yes, and who did this? Yes, blame the Democrats for doing the right thing again. At least from my perspective, another video coming at you. We're gonna be talking about some basics of just some basics that I need to catch up on.